While we are seeing a trend of recovery across equity markets after a major downturn that was seen in the past few days, especially yesterday. But despite that, Nifty lost more than 300 points off the day's high to end the day in the red. Insurance players like HDFC Life and SBI Life were the top losers. Sectorally, PSPs were the top losers, followed by autos and banks. But realty, IT and metals held the fort today, advancing in trade today. Meanwhile, what's happening in Asian markets? Well, Japan's Nikkei and Topix both witnessed a strong rebound in trade today after yesterday's massive fall. Nikkei closed 10.23% gains. It's a highest since October 2008, and additionally, the yen slumped around 1% versus the dollar. To discuss this further and what this really means for the global markets, including an impact on the Indian markets, we're now joined by Nadia Elbilassy, market analyst at the Equiti Group. Nadia, wonderful to have you back on the show. I want to understand from you, after yesterday's sterling stampede, wild moves in Japanese markets, the US markets, as well as other asset classes getting impacted. What should we make of the situation right now? Are we out of the woods, or is there more correction on the way? All right, so I've been told that Nadia is going to join us in just a short while from now. Some technical glitches being fixed, but that's the update as far as the markets are concerned. The Asian markets, Japan's Nikkei and Topix both witnessed a strong rebound in trade today. Nikkei closed with 10.23% gains, and that is its highest since October 2008. And additionally, the yen slumped around 1% versus the dollar. But let me also take you through what's happening as far as the global markets are concerned. We're seeing the Dow Jones is down 2.6%. Nasdaq is up 0.7%. S&P 500 up 0.55%. Meanwhile, gold is down as well. Oil is down. Meanwhile, the VIX has come down significantly. It is 17.9% down. It is 17.9% down. However, as compared to yesterday, this is a decent number that we can go with. But Nadia, I'm being told, is joining us. Nadia, thanks very much for joining us, and pleasure to have you back again on ET Now. I want to first ask from you, the kind of selling stampede that we saw yesterday, wild moves all across the globe. What does this really mean now, given that markets have in some way have settled today? But are we out of the woods completely, or will we see further correction on the way?
Hello, good to be back. So this was obviously triggered by the NFP data that came in weaker than expected, actually much weaker than expected. They came at 114,000 jobs versus the 170,000 expected. And this is coming down from the levels of 200,000 plus that we've been seeing for the past quarters. So for us to jut down to this level has sparked recession fears and concerns in the market globally, especially regarding the US, because they still have the higher for longer narrative. So it's also spooked investors furthermore. And I think this was the main reason for the sell-off. But when everything started just going down, then all the other investors also wanted to join with the sell-off, and it became like a domino effect. And this was the main reason, the labor market data and just seeing maybe even hard landing concerns.
Right, Nadia, but what I want to understand from you is that, are we out of the woods, or will you expect further more correction? There's also been some question about valuations being too high, especially as far as the tech stack is concerned. So will we see more correction coming in the near future?
Definitely on the backdrop of weaker forward guidance from earnings and weaker economic data, the two things, and less rate cut expectations, the three things actually that were holding together this bull run. But we were expecting to see a correction, maybe not as steep as the one that we saw yesterday. For example, the Nikkei losing 10% in just one day, and definitely not as steep as in one day correction. But I think because we are seeing a bull run since the start of the year, there must have been a correction. Now we're seeing this correction. I think that we can continue further a little bit more, but we still have much more to go before we enter the bear market territory. So I would definitely stay cautious, but I wouldn't be scared because I know what's coming.
Right. Right. So you are cautious, and usually when such a shakeout happens, it doesn't really go away in a hurry. So my next question to you is, what kind of a market structure are we expected to see, and how soon before we go back to the levels that the global markets were touching?
Definitely, there was record highs. The S&P 500 above 5,000. Is this sustainable? For now, we're going to be seeing a correction. Yes, everything is kind of overvalued, but we still haven't seen the return on all these AI investments. It's just a matter of when. But I think that once we start seeing the return of investments and the ROIs on this kind of investment, then this can secure the bull run to continue. Once we start to see again rate cuts happening, this can also support the bull run. For now, slowing economy backed up by a decrease in the GDP growth, economic indicators, job labor market data, all these things will negatively affect. But I think if we start to see some positive economic indicators,
right,
then this
Nadia,
can support.
I'm afraid we're completely running out of time. So let me ask that one final question from you. What's the possibility of a rate cut happening in September? Will it happen in September? And how many are you sort of factoring in? Market experts have stated that there could be 3 rate cuts with a 15 basis points rate cut in September.
Yes, the market consensus is that there could be 3 rate cuts this year, or there could be a 50 basis cut in September. I don't think that we will see more than this, more than 3 rate cuts. I think we will start with a 25 basis point cut, just because I think today we've seen a lot of markets correct. So the fact that we saw a little bit of a correction to the upside, then this can prevent a 50 basis point from happening.
All right. Thank you very much, Nadia, for sharing your thoughts with us. We are also seeing Asian stocks rebound on expectation of a Fed rate cut.